to bring a very impressive speaker, and not only one that's had some good success, but it's great that we can bring a Bronco, bring one of our own. But before I introduce our speaker, I want to introduce our faculty panel. John McIntosh, Associate Professor of Management, and Sean Mattingly, again, our questions today and are representing us with some good ideas and good questions as we get to that portion of the session. But let me talk a little bit more about PetIQ. PetIQ is an animal health and wellness company focused on increasing access to low-cost health care for pets and pet parents. The company owns and operates veterinary clinics across the United States and manufactures and distributes over 1,500 pet care prescription drugs and over-the-counter medications. Some of its customers are Walmart, Costco, Albertsons, Sam's Club, Target, PetSmart, and other key food, drug, and mass customers. Cord Christensen founded PetIQ in 2010 and has served as the CEO and chairman since that time. The company has evolved from being started on a card table to a NASDAQ publicly traded company with an enterprise value of over $1 billion and over 3,500 employees and annual sales in excess of over $650 million. While the most recent accomplishments of PetIQ cast a large shadow, Cord started his career with Albertsons and has been successful in many other CEO, presidential, and directorate positions in his exceptional career. And Cord earned a bachelor's degree in finance from Boise State University. Welcome, Cord Christensen.
Thank you. Thanks for having me today. It's an honor to come back to Boise State. As I mentioned, I graduated from Boise State in 1996 with a degree in finance. Went to work actually for Albertsons in my last semester about 3 months before I graduated. Almost didn't graduate because they put me on the road and I couldn't go to class anymore. But had great memories and obviously had great education here that helped me do a lot of things in my life as an entrepreneur, as a business person. I was born and raised in Boise. Went to Centennial High School, grew up on the west side of town. Was fortunate enough to be raised in a family that did enough to teach us how to work hard, but also made us earn it ourselves. And so we spent our years working, putting ourselves through school and just learning from a lot of people around us as we decided we didn't want to have to be poor too long. But had a lot of great mentors in my career that helped teach me and I learned from, and gave me a hunger and desire to believe that I could compete and be as successful as some of the great businessmen that grew up in this town. I started my career at Albertsons and was fortunate enough that I was one of those people that just didn't go along with the flow. I just always asked why, and I couldn't sit back even at a young age and just kind of follow the normal status quo. And so I started bringing ideas to my boss and ultimately to the chairman of Albertsons at the time, Gary Michael, who's a pretty well-known name in the town. And for whatever reason, he took to me, and at 26 years old, bought into one of my business plans. And at that point, I started at 26, running a department, opening up gas stations across the country for Albertsons, building Starbucks inside the stores. And basically, anything that was a non-traditional business unit for Albertsons, that was what I did. And it allowed me to go from a starting position, really entry level, $26,000 a year, to being the youngest vice president they had, where all the coworkers I had were in their 50s and I was 27 years old. But built out thousands of those, grew up business to almost $1 billion of revenue there as well. But had a hunger to do my own thing, and I just got tired of how hard I was working with being an entrepreneur and not being able to put my own stamp on it. So I left Albertsons in 1999 and started building companies. Built my first business. I built a lot of businesses I don't talk about because any good entrepreneur has like 20 or 30 that didn't work, but they only think about the 2 that did. I had one do extremely well, grew it from nothing to a little over $700 million in sales, sold it when I was 32 years old and had to leave Boise while I was building that, moved back to Boise, and basically retired at 32. What they didn't teach you in finance class was if you don't know what you're doing, you can lose all your money too. And so I went from retired to giving all the money to the recession, and literally in 2008 was looking to rebuild myself after having sold a business that gave me enough money to not have to work ever again. Sold the lake house up in McCall, sold everything, and started doing due diligence on starting another company. All I knew was retail. I knew how to do a bunch of things in retail to disintermediate and disrupt different markets, and so I started to look for ideas and opportunities. Literally had a situation where I took my pet to the vet for the first time, because for the first time I had lots of time on my hands and could actually help out with that kind of stuff. And I was just dumbfounded the size of the bill and what it cost, and just said, there's got to be a better way than this. And as I did my research on the veterinarian market, I found out that literally there's 100,000 veterinarians across the country, most of them small mom and pops, and there really is nothing to control pricing or cost or over-treatment. And because of cost and because of convenience and a lot of reasons, people in this country really don't take care of their pets very well. Over half the pets in this country never make it to the veterinarian. And so we said, wow, there's a huge opportunity. What we knew is the retailers that we have relationships with were providing 90% of all the calories that pets consume. So we believe that Walmart and Costco and Target and PetSmart, Petco, and all of these people had 90% of the pets. Well, half the pets are never making it to the veterinarian, and that's where they're buying their food. We kind of asked the question, why are all these products that are sold at the veterinarian not available in these retailers? Didn't make any sense to me. I mean, you had this huge market. At that time, just the pet products sold to the veterinarians' offices was over $6 billion. I will tell you at Albertsons, we see a $100 billion opportunity and get really excited about it. The fact that there was $6 billion of volume and it had never been sold in a Walmart before, I was super excited to dig in and figure it out. I was fortunate there was one company that had tried to bring the consumer savings in products for veterinarians, and that was 1-800-PetMeds. And I was also fortunate they were publicly traded for 10, 11 years at that time. And so I literally went into a room with a card table and had boxes and boxes and boxes of every public filing, every lawsuit, everything you can research on PetMeds. And I just started taking apart their business and rebuilding it together and saying, how do I become the PetMeds for major retail? Let the retailer make the money on some of the product, but let me be the middleman, first center, the back end. It gives you the same access that you get on PetMeds, but through, because at that time PetMeds was doing $250 million of business. I was like, I know I got Walmart, I got Costco, I got Target. If they can do $250 million at PetMeds, all these other guys combined can be significantly bigger with the same stuff. And at that time, if you bought something from PetMeds, you're probably saving about 30% from what the veterinarian would charge. And I also knew that consumers quickly follow where they save money, and they're smart. So if people could save that kind of money, we felt like the customers would just come really, really, really fast over to our channel. Through my diligence, I found a supplier that was one of the major suppliers of PetMeds. What was interesting about PetMeds is PetMeds couldn't buy anything they sold directly from the manufacturers. So they had people that called aggregators that would buy product literally from veterinarians. So veterinarians would buy a box of Frontline for $30, and they'd mark it up like 5% and sell it to an aggregator who would sell it to PetMeds. So through all my research and looking at these lawsuits, I found a bunch of those aggregators. So I started flying around the country, meeting with the people that were supplying PetMeds, and ultimately I just wanted to find out if the idea would work. So I found a guy in Florida that had been doing a lot of business with PetMeds, and I said, hey, would you sell me $1 million of Frontline Plus? And of course he said, sure. I didn't care if I made money on the first order, I just wanted to just be able to test the concept. If you went into a Costco and you could buy Frontline for $40 and it's $70 at the vet, how fast would you buy it there? How well would you recognize the brand, and would it work? Well, we put $1 million of Frontline in 160 Costco's on the West Coast. Out of the 430, we put them in 160. We sold $1 million of product in under 2 days. But in retail, we run metrics around how many units are you selling per hour per day. We then go annualize that out to get to some projection. And Costco came back and said, Cord, best promotional try we've ever had. How fast can you get us a run rate of $100 million of product a year? And I said, oh, I don't have enough money or time or people or warehouses to do $100 million. But I'm going to go start trying to figure out how to scale the business, because we knew we had a proof of concept that would work. People knew the brands in the vet, they knew what they cost, and they knew if they could see in places like Costco and Walmart, they would save money. And so we went out and started to scale that opportunity literally with one brand. We were the source of Frontline Plus for Costco, Walmart, and Kroger, the largest club store, the largest mass retailer, and the largest grocery store chain at the time. And literally didn't have enough money or infrastructure to do business with more than 3 people. Even though my phone was ringing off the hook from every other retailer, we took care of those 3, and we just literally sold 5 boxes of 3-month Frontline Plus, and for the first 2 years, that's all we did. It was coming out of a recession, you couldn't raise money. No one was putting capital into anything. So I would literally buy a truck of products, sell it, take the profit, hire an employee. Buy a truck, sell it, buy racking for the warehouse. Buy a truck, sell it, rent more space, and literally had to bootstrap it through that time period. I was fortunate. I had a couple mentors that I made a lot of money for, so I had credit, but no equity. And so I had a $2 million line of credit. I just turned like a machine to build from nothing to start the business. We kept building from there. So what I'm going to do now, guys, I'm going to take you through a slide deck. I'm going to tell you what we are today and how we've gotten to where we are now. And then I'm going to come back to the end of the presentation and take you through the timeline of how we went from that first $1 million order from Costco to where we are today, where I think this last month we're on a run rate to do about $800 million next year. We'll do a little over $680 million this year. The company makes $62 million this year. We'll make about $80 million next year. But we have aspirations of a business model that we believe will be over $2 billion in revenue by 2023, and we should be making about $300 million by then. So we from no money in the card table to 3,500 employees, it's been a pretty interesting run. So I'll tell you a little about the story, and then we'll tell you the rest of it, and then we'll come back and take questions. So our mission has evolved, but Lilly Pet IQ is smarter pet health. We aim to deliver a smarter way for pet parents to help their pets live their best lives through convenient access to affordable products and services. We want the 50% that don't go to the vet to have a location and a price they can afford to get treated. So while everyone's talking human health care, we quietly just took on pet health care and really went after that mission. Obviously, our company has 4 core values that drive our business. We absolutely have a commitment to everything about our business. We want our patients, our pets, our pet parents, our retailers. We want them to know that we're committed to our mission of helping people save money. We will not deviate from that model. Number 2, quality. If it's veterinarian care or product, it's deemed to be the highest quality in the pet industry, and we will never deviate from that, because as soon as we lose our credibility from a quality standpoint, it doesn't matter if you're saving money on something that sucks, but if you're saving money on the same thing, then you'll come back. Integrity, we're always going to run our business with our people and our customers and our retail partners with integrity. It's hard to do sometimes to admit you made a mistake and have to write the check to pay for it, but we do every day make sure that we keep our integrity level, that people want to do business with us. And then obviously our teamwork is what drives the business. It's now 3,500 employees that all have a system and a process we follow to go out and deliver all that revenue and treat all those pets and take care of all those customers. And so we always do that. We have 4 pillars for success. And again, don't deviate. Our locations and our products have to be convenient. If you want to buy it at Chewy.com, our products are going to be there. If you want to be at Walmart, it's at Walmart. If you want to take your pet to Tractor Supply, we're going to be there with a veterinarian. If you want to be at Walmart, we'll be there with a veterinarian. We're going to make it affordable. The average veterinarian ticket in the country right now is between $300 and $500. Our average ticket is under $100. We don't over-treat pets. We don't over-test. We sit down before and say, what can you afford? If you can only afford vaccination or heartworm, you're going to get it out for $50. If that's what you can afford, and we're going to get the most critical care. So think of us as always being committed to the right amount, where if you went to most vets, your dog goes in one door, 2 hours later it comes back out another door, it's had 32 tests, and there's a black envelope that says you just bought $500 worth of stuff and no one asked you along the way. So people love their vet, they hate the vet bill. And so we're committed to making sure it's affordable. As we said, we provide the vital care. We're going to focus on what you can afford and give you the care that you need for your pet. And obviously we love being in the pet industry because people that work in that industry love pets, and it's easy to have compassion for pets. And so our people are committed to the mission of what we're supporting. We literally have 3 different operating units in the company. As we said before, we run veterinary clinics or services. We distribute all the major brands that you could find at a veterinarian. We distribute those through major retailers. So whether it's Elanco or Merck or Boehringer or it's Zoetis, which is Pfizer Animal Health, we have all of their items available through major pharmacies and major retailers, just where you can save money on it because of the margin profile in those customers are cheaper. And what we found out along the way is for us to make enough money and for us to help people save enough money, we needed our own factories. And so we started building out an infrastructure to build generic versions of those products. What we didn't realize is veterinarians really don't like to sell you a generic. When they go to school, they actually get judged and taught how many dollars per pet can I make. Well, generics generate savings, but generate much lower dollars. And so instead of making $20 profit on a product, you maybe only make $5. And so you needed our model where we're agnostic to that situation, to where we just want people to save money. And so we went out and built up plants to build versions of those drugs there. We operate in 3 different brands. Our clinics are the first 3 brands. VIP Pet Care, Pet Vet, and VetIQ Smarter Pet Health is our other brand. Believe it or not, we just opened our first veterinary clinic in Boise at the Walmart over at Fairview and Eagle Road. And that'll be the VetIQ brand on that clinic. So if you have a pet and you want to get your pet taken care of for less than $100, we just opened 2 weeks ago. We need some business, so come see us. We'd love to shoot your pets. And then PetIQ is the company's name. We put in all of our manufacturing businesses. It's the business card we carry when we call on Walmart or any of our customers. And obviously our brand promise is anytime you get the same for less, we call it Smarter Pet Health. Our company's grown a ton since that first day in that one little room. We have our headquarters right now in Eagle, Idaho. We're in a 15,000 square foot building out there. We opened up a plant in Springville, Utah, south of Salt Lake. It's 240,000 square feet, where we make everything that's a healthcare item that tastes like bacon. So if it's a consumable product and takes for your pet and tastes like bacon, then it's getting made in Utah. In Florida, we have 142,000 square feet there. That first guy I told you I bought the $1 million front line from, I actually bought his business and took him from a 10,000 square foot building to now 142,000 square foot building and scaled that business in that location. It's a pharmacy. It's registered with the Board of Pharmacy. We can ship drugs across any state lines, any pharmacy in the country. We can deliver a pet prescription to over 70,000 pharmacies in the country in under 24 hours and do it for something a lot cheaper than FedEx. So it's one of these that we set up early. In Texas, we have 60,000 square feet where we make injection molded products. So if anyone's ever heard of greenies, like the dental bone that you feed your dogs, we make products like that there for dental care for pets. And then in California is VIP Pet Care. That's our service business we acquired. And so we have an office there that we operate all of our clinics out of. That's the headquarters for that business. And then just this last summer, we acquired another company called Perrigo Animal Health from the Perrigo Pharmaceutical Company. And they're a $13 billion company that tried to put me out of business for years and years and years. And they pay about $500 million for this business. Over the last 3 years, I took enough business from them that we took about $300 million of the value. And then they called me with a white flag and said, hey, would you like to buy the rest of it before you take it all? And so we bought what was left for $185 million this last summer. And so that facility is huge, and it's robots and all kinds of fun stuff. So being a finance guy, I'm really not a factory guy, so I love going and seeing all the robots making stuff and doing it, so it's pretty cool. Now it's a fun asset. We maintain 50% excess capacity across our infrastructure all the time. The reason is, as you can imagine, when you see our sales at the end, there was a year we were doing $5 million, there was $20 million, there was $60 million, there was $100 million. We've had to keep that kind of capacity because the size of the market we're in, we never know when it's going to explode and go at an even faster rate than we've been growing. But it just keeps, the numbers just keep compounding so fast that we have to keep that capacity ready to keep up with the market, because if we don't deliver when our customers need it, somebody else will. And so we found out that we need to keep that capacity to stay in front of the growth curve. We did just announce a new headquarters in Eagle, and we just submitted this building to the city of Eagle. We'll break ground on it in January. 60,000 square foot facility. We'll add about 250 to 300 new jobs to the Boise market. So we like Boise State graduates, so if people are looking for jobs in business, marketing, finance, sales, I'd love you to come take my job. I'm ready to quit, so it pays pretty well, but it's a lot of stress. So anyways, we're going to have a nice building out there and a bunch of jobs coming, but we're pretty excited about the growth we've had to start putting down deeper roots out there. So what do? We have 2 sides of the business, product and services. On the left side, we distribute 500 plus drugs that you normally get from your veterinarian Again, these are your prescription over-the-counter medications. We make all the same drugs that a dog or cat would need available through retail, just for a little bit less. We manufacture over 700 items. We're in 40 plus retail partners. There's probably not a retailer you can think of that sells pet products that we're not the #1 provider of healthcare products for that retailer, for pet. Over 60,000 points of distribution. That's only impressive when I launch a new product, and you think that the day we launch a new product, I get to put it in 60,000 stores. Back to that first metric at Costco, if you sell 1 unit a week, 60,000 points, it's 60,000 units times 52, and then take that times about $30. Every time we launch a product, you see what kind of math runs through our system as we launch new items across the country. On the right side there is our healthcare business. We acquired the business this first of 2018. It was the last national operator of veterinarian clinics that hadn't been acquired by the Mars company. People don't realize that Mars, the candy company, actually has a bigger pet company than a candy company. And they are the largest operator of veterinarian clinics in the country. They sell more dog food and more treats than any other company in the country. So all those M&Ms you've been buying, they didn't reinvest in pets. So I guess we may be onto something if even they can take their candy money and put it in pet. But they didn't find this asset, so we bought it. We're pretty excited about it. I'll tell you a little more about it, but essentially, we're one of the only last and able to scale a national operation of veterinarian clinics across the country. It's a very key part of our business, and I'll tell you a little more about that. Ultimately, those businesses are feeding together for us to drive healthier pets, help consumers save money. Retailers get into a category they never were in and participate in that profit, so they love us because it's all new business for them. We're helping the manufacturers grow faster. Remember the start I said 50% of the pets in our stores have never been to the vet. Well, 50% of our pets we're treating have never been to the vet, so we're growing the total market, which means they're selling prescriptions they wouldn't have otherwise sold without us, so they kind of like us. And then last, as a public company, if we do all that right and make more money, then the job is to help shareholders make money and keep them happy too, because they're a huge pain in the ass and you want to help them or you'll know. VIP, one of the exciting things about our business, those 36 offices across the country, we hire, train, and deploy veterinarians every day out in the stores to where we can run clinics within 5 miles of 90% of the U.S. population today. We just need time to build more clinics to get closer to the population, but the infrastructure is already built. And so it's pretty exciting to have that kind of infrastructure in place. The market we operate in, what they call the total addressable market, is only second to pet food. So pet food in the United States is about $38 billion. Services is a little over $21 billion. And the product business that was $6 billion when I started, the way it's been growing is now over a $10 billion market. And it grows at almost $1 billion a year now. So we have this huge market, and PetIQ's the first company to bring access to that market to major retailers. And today, really the only company doing it in the country. So that's our unique position in the market. So I get asked all the time, are you going to sell pet food? Why would I sell pet food? There's 100 companies that sell pet food. When I'm the only company that does this, I don't have a lot of competition. So I just keep my head down and not worry about pissing somebody off to want to be a competitor. So anyways, that's what we do. Again, we talked about the distributed products, the manufacturing facilities, and the clinics. I'll tell you now about the rest of our clinic story. Oh, customers. These are the brands we're doing business in. There's some that are on there, but pretty much anyone of any size and scale, we are the healthcare provider for pet products and a significant provider of veterinary services through their stores. Our strategy is pretty straightforward. When the company hit, where we are today, where we'll do a little over $650 million, I think our guidance for this year is a little over $680 million. Our run rate is almost $800 million. And when you make the kind of money we're starting to make now, I get out of bed every day just saying, don't go backwards. Just maximize the base, protect the front, make sure we take care of business, because as long as we just take care of that, everyone's paycheck's going to cash for a long time, we're going to make plenty of money. And so we wake up every day center on the fact that we're going to take care of business. Besides taking care of business, we got to grow. If you're a public company, you got to grow. So we grow through two ways. The first way we grow is we're going to expand our service organization. Today, we treat about 1.5 million pets. Each one of those pets is worth a little under $100, so about $150 million of sales. We're going to build out more clinics, bring in more pets. We'll grow that pet count to about 8 million pets by 2023. At $100 a pet, $800 million of incremental business that can come through the company. by just expanding that base of stores. And we'll tell you how we'll do that. The good news is our product business, we're outpacing the market significantly. The market's growing at 7%, we're growing at like 40%. Consumers kind of like to save money, and the things we're doing is working. If they're coming back, they're telling their friends, and so that business almost just takes care of itself. We get dragged along on just how fast the business is growing on that side. More importantly, if you have 8 million pets go through your clinics, and you write prescriptions for your products, and tell people that these are the things they need to take for their pets and save money, we'll add at the same time we have that $800 million in revenue from new pets, about $350 million of product revenue that attaches to those pets. So we have this business that kind of feeds itself and takes care of business. It also is pretty good when the retailers know you're investing in the stores to bring pets in, and then you're driving the revenue sales back through their stores. It creates a pretty loyal bond between us and them. And obviously the manufacturers that we're distributing for, they kind of like it too, because we're not only just distributing, but we're actually writing them checks bigger than they write us to distribute their products. They make about 80% on a prescription. We make much less than 80%, so if we grow up 350 million, I'm Santa Claus for these manufacturers, and we'll write them checks of $250, $300 million when we get to that kind of level. But they love to know you have a distributor that isn't just moving boxes cheap. Anybody can move boxes cheap. Adding incremental value, you can put a value on to where when they ask me, hey Cord, what are you doing for the money I'm paying you? I reversed the question and said, what are you doing for me to keep writing scripts for you? Because my check's a lot bigger to you than it is to me. And they love that because they're, all right. So we have a very balanced discussion when we talk about how that works. We talked about our clinics. We run 2 types of clinics. We have community clinics, which on the left is our mobile clinics. So we actually have these vans that go to retail stores across the country. We have this big thing that people think we're bringing a coffin into the store. It's a really cool kit. We hit the go-go gadget button, and we literally pop up a mini veterinary clinic inside the store. And we'll treat 50, 60, 100 pets in a matter of a few hours at a pet store in the country. We start out going 1 day a week and then grow from there. The other type of clinics we run are what we call wellness centers. Wellness centers are fixed shops inside of retail. We only run stores inside of another retailer. Those are 5 day a week, dedicated veterinarian who's there all those 5 days, usually 2 to 3 technicians as well. We'll see 400 to 600 pets a month minimum in a wellness center, and revenue in those will be between $500,000 and $600,000 a year for one of those clinics. The good news is that the community clinics is a great incubator, a low-risk way to grow into wellness centers. So you think we start a new shop with a community clinic, we show up with a van, roll our kit 1 day a month. My most expensive cost in running our stores are veterinarians. Really expensive. They go to medical school, they get paid like they're a doctor, right? So if I don't have any pets in the store, I'm losing money. So we start out 1 day, when the pet count gets high enough, we go to 2 days a month, then we go to 3, then we go to 4. Again, de-risking that labor cost. Once we de-risk that labor cost, we see enough pets are coming through there, we flip the model over to a wellness center, which is like what you see on the right. So in summary, 1 time a month goes to 2 times a month, which is about 25 pets per month. We get to about 50 pets per month, and then we go to where we're there every week at 100 pets a month. Once we're at 100 pets a month, we can flip it over to a wellness center. We run community clinics today and maintain a base of about 3,500 stores that we run community clinics in. And we're literally just pulling the cream off the top into wellness centers every single year. We already have about 600 plus community clinics that are ready for conversion now. And so we talk about growing to 1,000 new clinics. Well, 600 are already ready for us to convert. We're just trying to keep the team to where we can see how fast we get those converted. But again, every year we open up more community clinics. They start in the same model of growing and feeding the model, and then we get to where we open up another wellness center through that model. So this by itself can feed us to 1,000 wellness centers and feed us to that 800 plus million in service revenue. What we love about service revenue, it's one of our highest margin businesses. Before we pay the veterinarian, our margins are almost 82%. And so if we get enough pets going through there, we can cover the labor, it's incredibly profitable. And so it's a big part of how we feed our EBITDA strategy to grow profitability for the company. And when we talk about our financial results later, you'll see why our EBITDA margins are expanding as you look at where we focus to grow the business in those areas that we have the expanded margin profile. On the product side, we really grow the business and have a pretty amazing source of growth. I mean, first and foremost, when you help people save money, they do business with you. And we like to tell people, and from a product standpoint, we're like the Walmart of product, but yet we have every retailer out there that is out there. So where the industry's growing at 7, we're growing at 40%. But when the base gets to where now the product business is now approaching 650, 700 million, and it starts growing at 30, 40%, we start seeing $150 million a year of just compounded growth, just because that's how fast consumers are learning they can save money. So even though we're doing $650 million, $700 million of product, it's an $11 billion market, which means there's still $10 billion over there where people are paying more. So we have a huge opportunity to continue to outpace the market. We also expanded into new doors. We have all those 40 retailers, but not every item's in every door at every retailer. I have 120 items at Walmart, some are in 2,000 stores, some are in 4,000 stores. Back to that metric I talked about, you put an item in the store, sell that many units a week. By the time you get more doors, if I had 2,000 stores at Walmart for an item that sells 2 units a week, that's 4,000 units a week, 200,000 units a year. 200,000 units a year for an item that I make $10 on, it's a lot of money. And that's literally how fast it can happen. Remember, we have 1,500 items that we're out there trying to make sure is in all those doors. We also have the ability to expand into new doors. Unfortunately, it's not like it was back in 2015 when we were adding tons of new customers. We pretty much have all the customers now, but they're opening new stores. So Tractor Supply opens 100 new stores a year. Walmart opens this many new stores a year. Every time a new store opens, my base grows with my items being extended into those stores to be part of their retail sets and part of what's on the shelf. The other side is new item innovation. This is probably my favorite because with 60,000 points of distribution, if I come up with a really good idea and I launch it and it goes into 60,000 stores overnight, and take a flea and tick item where you have 5 SKUs for each size of dog and cat. If I get some new breakthrough in flea and tick, and all of a sudden I have 5 items, make it into 40,000 stores, and they sell 1 unit a week. That's literally millions upon millions of boxes where we go generate profit, and it just drives into that. The good news is we distribute for all the major manufacturers, so we get their entire R&D portfolio with our entire R&D portfolio. So we're launching new items every single year. They're expensive to do. This industry is regulated just like human medicine. So all of our drugs, all of our products have to go through the FDA, or for flea and tick to the EPA. A cheap product to develop would be a couple $1 million. And we have items that will spend $6-7 million to develop to launch into the market. And so we have a pipeline that's usually running about $20 to $30 million that's just constantly being fed items and projects, because there's always something new that we're anticipating when a patent's going to expire or something else is going to get done. So what we love about our business is we've really taken the perfect combination of a service model that sees the customer, the pet, and then we're driving those pets back in to buy our products. And so we really have this continual pendulum of how we're feeding our own business growth. It started out by just putting products cheaper in the store, and we've now perfected the model to where we really are complementing how services and product work together to drive incremental value for everyone involved in the value chain. So the consumers love us because they're saving money. They tell their friends, they're very lots of these, and ultimately the retailers love us because before Pet IQ, none of these items were in Walmart. We have customers now that are doing hundreds of millions of dollars of business in the veterinarian category that didn't do it before. Making that as new margins, those new profits, and getting that new growth every year, they're very happy. When I went into Walmart for the first time, their flea and tick category was $100 million, and they were doing about 7 million boxes. Just putting the right items on the shelf. It's now a $300 million category, still doing 7 million units, but now at much higher prices, and the pets are getting the right health care. They're getting the right items instead of stuff that really wasn't that great before. Now, ultimately, if we can get more care out to the pet, from the veterinarian stand to treat new pets, we're growing the business for everybody involved as those pets get treated. It's good for the pets because they're able to get the care they deserve. And then obviously we feed the product through those services. So the company's done extremely well. We had a 50% CAGR over the last 4 years, from 200 million to, like I said, this year over 680 million, and we'll be almost 800 million next year. On our earnings, which is for you business students, the best part, if your sales are growing 50%, you want your earnings to go some rate higher than that, or your business model sucks, because you should be able to make more money off of leveraging your G&A expenses. We've been fortunate that while Our sales have grown at 50%, our earnings have grown at 80%. That basically means you only need one CEO to do 680, and the same CEO got paid when you were doing 200 million. So you start to make more money as you leverage those expenses across the business. And we're making about 10% EBITDA margin right now. But with that leverage in place and with our mix of services and our own manufacturing product, we think we can grow that EBITDA margin to over 15% by 2023. This last quarter, we had another exceptional quarter. We grew sales by 42%. Year to date, we're up 33% at 555 million. Adjusted EBITDA for the quarter was up 44%, and year to date, we're up 45% just on this year alone. So it's been another great year for the company. Now you do the public company stuff, and this is the part that's always so hard in my job, is we have to constantly give the market guidance on what our financial performance is going to be. I tell you all the time, I said, so I have to guess how many people are going to leave the vet and want to save money in retail, and being able to guess that. The good news is, I just keep guessing really conservatively, and we just keep getting more people coming faster, so we keep beating our guidance. So that part's been good to happen. But this year you can see how we've compounded with the acquisition. Our long-term targets is we want to continue to grow the business at 15% top line, grow EBITDA at 20%. We want our EBITDA margin to grow to over 15% by 2023. And ultimately, we know we can get there through adding 1,000 wellness clinics to the company, to where we believe we can be close to $2 billion in revenue and 300 million in earnings by the time we're entering the 2024 calendar year. So it's a lot of mouthful to tell you what we are today, because that's what we are today. Let me tell you how we got here. And this is the part for you coming out of school, and as you think about building a business, all the crazy things that go on to get to that point. In 2010, as I said, I sat down and I did that first deal at Costco. And overnight, I was fortunate to have a couple mentors that gave me a line of credit that grew from $2 million to $10 million. And that's really where we started. We had one customer. In the second year, all we did is add Walmart. That's it. Sales went from 5.8 million to 31 million from year one to year two. Not many businesses can handle that kind of growth, just infrastructure-wise, and believe me, the hours we worked just to pull that off. And then we added Sam's Club the next year, and 31 million became 75 million. We also at that time decided that we weren't just going to be in the over-the-counter medication. We were ready to launch our prescription drug program. And we signed up Walmart, Costco, Sam's Club, and Kroger. And we basically, having never raised a dime, I hadn't even been in New York City. I was literally a kid from Idaho and had no reason to be out there. And we looked at it and said, we have to have a balance sheet to support the inventory and growth of the company. And so we got some introductions. I went to New York City. I met with a group that decided to represent us, and we met with about 100 private equity and venture capital firms. Literally of the 100, 50 of them made us offers. And it isn't always what you think, but the guy that was the nicest that gave us the best offer, we signed a term sheet with, and he was a bait and switch guy. Literally 10 minutes after we'd signed it, he tried to change the terms and tried to say that, hadn't done any due diligence, he was already saying he had issues with the business and needed to renegotiate. So having been through the things I've been through in my life, I just was not going to do business with people like that. So I threw him out, tore up his sheet, said, hey, it's fine, I'm not renegotiating. But now I just put chapstick on and go back to the second place and third place finisher and say, hey, deal's off, do you want in? And see if one of them would take the deal. Fortunately, the second place group wanted the deal bad enough that they stayed and kept true to the original offer that they made to us. And we took in $37 million of private equity funding in 2012. That money went straight to the balance sheet to finally have a balance sheet we could actually not have to bootstrap the business and really start running the company. More importantly, that business started in 2010. In 2012, we had a post-money valuation, and that's really the value of what they bought for $37 million, was 37% of the business, or for you math majors, we had a post-money valuation of $100 million on the company. I promise you, I did not feel rich yet, because you don't need any of the money. It's a really nice thing to say it's $100 million, but I was still trying to make payroll. So we took in $37 million. 2013, we opened up the Florida facility and expanded from 10,000 square feet to literally having two facilities that were 165,000 feet. We've now optimized back into 142. We launched a product line called Minties, which was a competitor to Greenies. Greenies would not sell their product to Walmart and Costco, and so we launched Minties, and literally right in the package said, compare to Greenies. You know what that got me? A $6.8 million lawsuit. I'm not talking about they sued me for it, that's what my legal bill was, and just about put me out of business. And they ended up suing me in like 9 different states, trying to think we'd get put out of business by not defending the business, but again, we were doing so well that the board was okay with us spending the lawyer money. My time was in courts and testifying, and at one point I was in Texas in a trial that if we would have lost and got the judgment, it would have put us out of business. Fortunately, we won and ended up winning all those cases, but they don't give you your $6.8 million back in that situation. So Mars was not happy with us, and we fortunately weathered the storm. In 2014, we had an opportunity to buy a company in Ireland that had a piece of technology that we thought would be extremely valuable for the U.S. market. We went to our board and said, hey, we'd like to buy this business. And the board said, you know what, we want to buy it, but we don't want to let any new partners in. And so fortunately for us, at that time the board had been drinking the Kool-Aid enough that every time we wanted to do a deal after that, we literally passed the hat and everybody proportionally wrote the check so they wouldn't dilute. And we really had this built-in structure where we had done enough of keeping our promises and delivered the numbers and built the team to where we literally had an unlimited amount of capital as long as the business plan made sense. And so we did $18 million to buy the business and then turned right around and built a $20 million factory in Utah that would allow us to scale the technology and a bunch of other things. Both times the board wrote the check and we didn't need to bring in any new partners and I didn't need to do any outside fundraising. In 2015, we did our first generic. We launched a generic version of Frontline Plus. And about a month later, I got my second big lawsuit from the makers of Frontline Plus. Got hauled into court in Georgia. I just have always believed you don't mess with IP. You will lose, it will cost you a ton of money, but if I believe we can do something that is legal and is right, I will defend that position. And we launched that item knowing we were legal. When we got to court, we showed the judge and the Marielle, the maker of Frontline Plus, that we had done it legally. We were the first company that had ever done it legally and the first time they ever dropped a lawsuit. They invited me to their headquarters. I met the president of the company, her name was Susan Schultz, and we, for the first time, was able to sit face to face with the makers of all these brands we've been building in retail and tell them the story of why they wanted us to be their partner and their friend and do business with them. And they actually bought the story, and we did our first direct deal and had a contract in place to be the first company ever not to have to go through some type of aggregator like PetNets did, and we started buying direct. Susan actually liked us so well, months later she actually joined our board of directors, and about a year into being on the board, she loved it so much that she came and said, Cord, I just love your business, I want to be part of the company, and I hired her and she's now the president of our company, so it's kind of funny. She was the president of a $2 billion revenue business, and now she's the president of our company, helping me run the growth of the business. It's been super fun to kind of see that one little lawsuit turn full circle to having such a great partner, and then obviously a really talented executive in Boise that used to be on the East Coast and now lives here and loves it. So, in 2017, we identified an acquisition that was way too big for us, and in my normal style, it's not. If it makes sense, there is the money, figure out how to fund it, and we determined that our best way to acquire VIP Pet Care, the healthcare business, was to take the company public. And we did that because with public currency, it's like having a checkbook. You hand people stock, and they can put a value on it. As long as you can show the growth and how you're managing it, you have the ability to do a lot of things with that public currency. So we took the company public in 2017. Probably the coolest thing I've done in my business career, and probably also one of the hardest things I've ever had to go through. You spend months and months and months building a presentation about why people should invest in your public company. And then you try and time the market, which we didn't do. In 2016, we were trying to go public, and there was no IPOs in 2016 unless you were a company that either went public or went bankrupt. So if you had a good business, you didn't go public in 2016. So we literally ran the business privately as a public company just to get a cadence of what it was like to write NQs and run the business so we were ready to go public. Best thing we ever did, because we learned what all the things we would have done wrong. And so by the time the market was ready, we were ready to be a public company. When you finally go public, you go out and start in New York, and they test the market that day and say, okay, well, this is the time. Once you go, you go. And they literally have a sales team out there from 6 different banks that are going to provide coverage, and they book appointments for you all over the country. And you literally meet with shareholders and potential shareholders in every city in this country for 14 days. They have this thing called a book, which is actually an iPad. Probably was a book back in the day, but it's an order book. And you literally walk into a meeting, you pitch on your idea, and they can buy and put an offer in to buy stock at the end of the meeting or whenever they want up until the book closes. When you start on Monday and you close on a Thursday, you go public on Friday, basically 10 business days later. You literally are in a meeting or on a phone call 18 hours a day. It's the craziest thing ever. I literally remember being in cities I didn't know where I was, and they'd throw me on a private jet in Baltimore, and I would literally wake up in San Francisco. They wind up the monkey, and you go back to selling again, and not even go to a hotel room, just go right back into pitching shareholders, finish and find out you have another big group in Philadelphia, so you jump on the plane, fly to Philadelphia, go through a whole other set of meetings there. But what's interesting about the book, we wanted to raise $115 million, and we were about 2 days into it, we crossed $130 million. Being again the naive, never taken a company public before, I was like, great, we're done. 130 million. Well, let's go home, enough of this stuff. And that's what they told me. They said, Corey, you don't understand. If you don't get 5 to 10 times overprescribed, you will not keep the book you have. They will not pay the price that they've offered to pay. And if you do go public, they're going to offer you about half of the rate you want. The supply and demand has to be so high to keep even the share price you want to start at. And if you get to 10 times, that's how you can start asking for a premium and you start being able to accelerate the price. So I'm at 130 million here, I'm done. I'm like, oh no, we got to go do this another 10 times. And we didn't have enough people. We should have been there, but no orders. We're like, Corey, you don't get it. All the orders are going to come in Thursday afternoon. You won't even know how you did till Thursday at 4 o'clock when it's time to allocate the stock. So I'm literally selling my off every single day. Hopefully the orders come in, and we literally were frozen at $130 million until Thursday. So I'm in Chicago with my last set of meetings. I'd set a team, we had a war room. The only time in a public company's history that you get to decide who gets to own your stock is that meeting. So Thursday night from 4 o'clock until when the market opens the next day, it's literally an overnight process of deciding who you want to own your stock. And if you have enough people that want it, then you really can be picky and decide. If you don't, you're just hoping they stay interested, because if there's not over interest in the people that were interested, why is no one else interested? What did I miss? So Thursday at 4 o'clock, all of a sudden the orders started flooding in, and we literally went from 130 million to almost $1 billion in offers for that $115 million stock. And I went from, we're not going to make it, to holy cow, we pulled this off. So I'm in Chicago. Everyone's out there allocating. There's more MIT math people pulling up, different past performance of how people have treated stocks and how they own this. And by the end of the night, we allocated all $115 million. We had priced the IPO at $16 a share. So at the opening, all those people that got allocation paid $16. You go the next morning, I flew from Chicago. We went to Times Square. NASDAQ is actually located on Times Square in New York. And we did the whole opening bell ceremony, and you ring the bell, and then they walk you over to this big trading board, and you start seeing interest in your stock. Well, they won't let a company go public until you get a stabilized share price, which is crazy to think, but we literally sat there for 3 hours waiting for the stock to get to a point they could stabilize it, because it went from 16 to 27 to 28 to 23 to 26 to 25, and they won't go when it's like that. They want it to be 22 and 16. And so eventually, we caught a blip where for 15 minutes it stayed at 22, and they said, we just got to go. It's already almost 1 o'clock. So they hit the button, started trading, and that whole bubble's over. You're public. They walk you out the street, thank you, take a picture in front of the sign, and I was shopping in Soho 10 minutes later trying to eat a burger and watching the stock every 13 seconds. And what I did for like the first 6 months of being a public company, they realized that don't watch a public stock every single day is a way to really piss yourself off. And so, yeah, stock traded up, closed the first day at $28 a share. Market cap, we closed that day at about $460 million in market cap. And that set us on our way to start really pulling out the next big chapter of the company. When you talk about that $270 million of sales we did in 2017 and $20 million in earnings, to 680, now 800, and making $80 million. We've literally grown our earnings 4x in 24 months because we have public currency to make strategic moves, and we've been extremely good at integrating and executing the plans once we made those acquisitions. So we did the deal, we integrated it, pulled it off, it went extremely well. The stock ran up to $42 a share. We hit a $1.2 billion market cap. I think enterprise value was approaching $1.4 billion. And I got a call from the bank that said, hey, Cord, you really should de-lever the business. And so they have what's called a primary or secondary offering, where you can go out and issue more shares to generate funding for the company and to help your original shareholders get their money back. I went into like deep sweats because I'm like, are you kidding me? I'm going to do another IPO roadshow for 14 days? And they're like, no. This time it's a 48-hour. You come to New York, it's all phone calls. You don't go in person. And literally 48 hours later, we closed $225 million at $39 a share. Every investor that had been in with us since 2010 got all their money back in a return, and we put about $125 million on the company's balance sheet to get the company a better foundation for the future to do more things we wanted to do in the future for the business. At that point, guys, we've literally now raised and put into the company almost $500 million of funding to build the company. We took that last round plus some debt on, and we acquired the Paragon Health business for $185 million this last July. And when we acquired them, it really seeded us as the #1 company in animal health across the country that executes through a major retailer. So all the things you didn't know, there's a lot you didn't know. I've never taken a company public. I've never been a veterinarian. I was an Albertsons retail executive that just had a retail strategy. You couldn't have been a veterinarian and figure out how to do it in retail. You had to be a retailer to bring the animal health industry into retail to make it work. But ultimately, lots of scars. We had multiple times to shoot our business, and it wasn't the lawsuits. I had a bank at one point just decide to exit financing retail. I lost my line of credit with 3 days notice. I had a $20 million line of credit that without credit I couldn't ship my customers. If you can't ship your customers, about 3 days later you're out of business. So I literally had to raise $20 million in cash to cover all of our business needs until I could refinance the business with debt. And ultimately, it was another one of those times that, as an entrepreneur, you say, now, did I really sign up for this job, and does it really pay that well? We just had a lot of different things we went through to build the business, but ultimately, we solved problems fast. We worked really hard. We built out an amazing team of people and executives. Most of them that are running the key divisions of this company are all people based here in Boise that were trained in businesses around Boise that help us run this business, which is fun to see happen. And today we run 3,500 employees, almost 1 million square feet of our own factories and distribution centers. We're growing at somewhere around $150 million a year in the business. And we're the quiet little company in Eagle that no one's heard of because we just wanted to stay on the radar until we needed to raise our head up, and just felt like no reason to let people know things are working if we didn't have to. But that's really the story of how we've been built at IQ. I think the rest of the time is for you guys to ask me questions. I'm okay with any question. If I can't answer because of issues with being a public company, I'll tell you, but otherwise I'm happy to answer any question you have.
Thank you very much. I think what we'll do is hear from our distinguished faculty panel and then open it up to student and community questions.
Okay, I'll begin. That's a remarkable ride, and it actually mirrors the trajectory of some of the companies in the early dot-com era. The story about the roadshow and all the craziness that goes on is very, very reminiscent of that time. You said a couple of really interesting things early on that I hope will benefit the students in the room. The first one is that you had a hunger at our business, the hunger to do something. And that hunger met with opportunity. And the result is this. Now, translating those two words into Gen Z speak, we're talking about passion and purpose. How did you connect your passion, your hunger, with a purpose, an opportunity?
It's funny, I had a couple of students the last class come up and ask me that very question for advice, and I just was one of those people that, one, I was like raised by that dad that he dug a hole in the backyard and filled it up and dug it again over another corner, and just taught us the value of hard work. I mean, nothing's easy. There's a few lucky stories out there that you read about on Instagram or whatever about someone making it rich quick, and your generation has absolutely made some of the biggest, you know, advances in wealth and big hits, but you know, you can count those on a number of hands, but not. I mean, I grew up in very traditional block and tackle. You have to make a profit to make money, but I just believed that I had the ability to compete and win. I wasn't afraid to open my mouth if I didn't think something was right. I wasn't going to be political. I mean, it was like I was 25 years old at Albertsons, and I was saying, that's not the right way to do it. Why are we doing that? That is dumb. And ultimately, because I spoke up and I was right, I was given the opportunity to then go take chances. And there were a lot of things I wish I'd have known back then. I would have done better. But ultimately, I wanted it worse than the people around me. I was willing to go after it and make sure that I got it. I was also very fortunate that I grew up around some very successful people in this town, and having grown up with them, they were very kind to tell me about how they made it. But I also connected the dots quickly that they were just people, and they too just worked hard, and they stayed focused on a mission, and they delivered against that, and it generated a bunch of wealth. And Idaho's a market where we have a lot of people that started at nothing that now are worth a lot of money. There's not this old family money. Go back to the old family money in this town, they will tell you the day when they had nothing. And this country has tons of opportunity still in it if you're willing to work hard and try. I have a son, my oldest son is literally probably got more good ideas than I've ever had. I'm that guy that's had a lot of bad ideas, but I'm not afraid to start all of them, and I'm not afraid to fail fast. His ideas are 10 times better than mine, but he's too afraid to start any of them. He's afraid to fail, and I can tell you, you will never be a good business person and an entrepreneur if you're not okay failing. Just fail really fast. Get bad ideas over, get on to the next idea, and work really hard to make sure you gave it all your effort to be there. But I just always was okay failing. I've had plenty of things I failed on. I've always taken care of the people that helped invest with me. I always had a plan. I always was very buttoned up in our business objectives and why it should work. But I was never afraid to start something and try if I had a passion to just go after it. But I also am one of those people too that believes firmly that we all should try and reach our potential, whatever that is. I don't know that I've ever found my potential. I don't know if I'll be able to reach my potential. I keep extending my stride to see how far my potential can be extended, and I think that's what it's about. Wherever you feel comfortable that you've reached your potential or your balance between quality of life and work and other things, that's all those things that you have to decide. I wasn't a great athlete, I was a great business person. I always had great ideas, worked hard, wanted to be successful in that area of my life. I had a passion for it, and so I just never was able to believe I wouldn't have the opportunity to win if I went out and tried it.
Thanks, Cord. One of the things that interested me from your presentation is this investment in manufacturing, and I've noticed a trend in retail generally. A lot of retailers are investing more in backwards. Amazon with their Whole Foods 365 brand, Walmart's buying up dairy farms and clothing manufacturers. What percent of your business now is from your own manufacturing, and how do you see that trend going forward?
Yeah, good question. So I'm not worried about what percentage of my sales it is, I'm worried about what percentage of my earnings it is. So if we make $80 million next year, 60 million of the 80 million comes from my own clinics and my own manufacturing. Only 20 million of the 80 comes from things I do for other people. And also, our products and services are very controlled. If you control that pet relationship, and you get to decide what they're going to go buy or what they think their pet needs, and we have a lot of ability to control where we drive value. Now, we would never give someone not the right care, the right medicine, just to make more money. But ultimately, we get to see the trends across the market because we're seeing the end user and we're driving our business to meet those needs. But so we may have a generic that's only $12, but we may make 80% margin on it versus a product that sells for $30 that's branded that we only make $2 or $3 on. So it's really about driving the right value and the right control and making sure we have the ability to drive the right earnings profile for the company and its mix.
Great, thank you, Dr. Mattingly and Dr. McIntosh. Now we'll open it up to both community business leaders and students, and let's start on the blue side of the room and see if we have any questions over here.
Hi, my name's JJ. My question for you, you mentioned a lot of your success came from having mentors that you could rely on, both for your line of credit and for guidance. How do you find a mentor?
Great question. So my first mentor was actually my best friend's dad growing up since I was like 5 years old, and he was a very successful business person. And ultimately, he saw a lot of himself in me, and his own son didn't have any interest in business, and so he started to mentor me very early on as I had ideas, and he always saw me out hustling, always had my side hustle going, and so as I got older, he was the first check in every single deal I did and always helped me think through getting the business started. My other two mentors that have been key in my life was when I went to Albertsons, Gary Michael ended up being a significant mentor to me at that company, and being as accomplished as he is, you couldn't ask for a better mentor than him. But same thing, he saw a lot of himself in me and saw what we executed and did to where even today he's on my board of directors, has been mentoring me through PetIQ, years later. I left Albertsons in 1999. I think one of the smartest guys that ever worked there is still back helping me with this business. So it's fun. You find it through different means. Typically, they're people that you're in your life in some way, you relate to, you admire them, have success. What I would tell you is I've always believed that successful people go through a time in their life where they're going to learn, and they're going to go out there to earn, and then they're going to go back and return. It's just how it works. You learn, you earn, you return, and people want to help people that want to help themselves. And so I've not met a successful person that if someone really, really wants to glean knowledge and learn, that won't give you time. You'd be surprised how many lunches I take with people that call up and say, hey, I'm a student, blah, blah, blah. I love what you're doing. Can I just have an hour? I want to ask you some questions on how you did that. You'd be surprised how many people will just do those type of things too. So I just say you will avoid a lot of mistakes if you can find some people that have been through it, because I can promise you, I wish I would have known a lot more than I did when I started with business. I was really glad I had people I could go to and say how I saw this. Those gray hairs and those bald heads have earned every one of them, I promise you.
Great. Thanks for that question, JJ. And now on the orange side of the room.
Hi, my name is Annie, and I was just wondering if the company has ever considered partnering with like local animal shelters or gone on to like an adoption side of things to work with pets?
Good question. Yeah, we do. We actually today write probably almost $2 million of checks a year to different shelters across the country. We spread the checks out a lot because we're in so many markets, and it's one of the ways we connect all our clinics to the market. We actually see a lot of shelter pets through our clinics because our pricing is so affordable that we have those veterinarians, we can do that. So we're always reinvesting and growing that way, but we do invest a lot back into it. We haven't figured out the adoption thing yet through our model, but definitely investing in the clinics and investing in the shelters.
Thank you, Annie. Now we'll go blue side of the room. We have a question over here. Here I come. Got it, Bailey?
Hi, I'm Joseph, and you talked a lot about how you were a private company that went publicly traded on the NASDAQ, and I was just wondering what would be some advice you would say if someone doesn't want to try to do something like that?
Check your sanity first. Make sure you really, there's no glory in being a public company. You have to have a very, very significant business purpose to want to be a public company. It's a pain in the ass, it really is. So you have to need it. Now, we needed it. We couldn't have done the deal we've done. We couldn't have grown like we've grown. We couldn't have put the incremental diversification and security across the business platform without it. So it was good for us. Find people that have done it. Get advice. There's a bunch of sharks out there that don't know what they're doing. I will tell you, if a company makes it to the public markets, you are in such a condition because the amount of diligence that they do and tear your business apart, and these people, as far as people you've ever met that are looking at your business, that if a company makes it on the market, it is a really, really good company. You can't trick the market. You can't. You have to be buttoned up. Your accounting, your plans, the diligence. They're going to call every customer. They're going to call every supplier. They're going to check every fact. And it just know that if you do it for the right reasons, it can be a great tool. It should be your last option if you have to need it or it's not worth it.
Very good. We'll open it to both sides of the room. Please just raise your hand. We'll bring you the mic. Bailey, back row blue.
Thank you. Cord, Andy Scoggin.
Hey, Andy.
Hey, we go
Long
way
time no
back.
see.
I started Albertsons about the same time you did. Your most valuable failure since you left the company that you really learned from?
Wow, you're making my dirty laundry out here, aren't you?
That's how we learn.
So my most valuable failure is early on, if I thought I could make $1, I would do business with about anybody if I thought they could provide what I needed. And I found out a couple times in my life that bad people, no matter what they give you, eventually do end up taking advantage and screwing you. So at a very young age, I sold my first business to a guy out of Minneapolis that he had just some interesting character flaws that I could see, but he was so successful and everyone loved him and he was so charismatic that I did business with him anyways, and he bought the business, but he ended up stealing about $50 million from me and my partner. It ended up costing me to have to actually start PetIQ, so I can say it was good and bad because he stole all the money, which made me lose everything, but then in return it forced me to get back out and do this, which has by far been the most successful business I've built. So bad people are bad people. Make sure you don't ignore people's character. They will screw you, period. I've had it happen a couple of times in my life. Money does weird things to people, and so that's probably my most valuable lesson from a failure is just, if you see a person and you believe they're not an honest, good person, then you know what, they're going to get you at some point. Run, no, it's not worth it. Move on, get to someone you know you can trust.
Thanks for that great advice. So we have a question on the orange side.
Hi, Cord. I'm Jess with Idaho Technology Council. My question to you, you talked about disrupting markets, and what I'm hearing is that you should probably disrupt the legal industry because you spend enough money in that market. But do you have any little secrets that you're planning something possibly coming up that maybe we could be let in on, another market that you're looking at?
Craziest question, Eric. Would you like me to give away one of my secrets on how to make a bunch of money? No. No, it's okay to ask, but no. No, we're actually pretty down the middle of the fairway at this point. I mean, we have new items that are confidential that we're putting a lot of money into. We have an R&D budget. We're spending about $30 million to bring new technologies and new items to market that we think will grow the business. But our business model is actually built out. We could be a $2 billion business and not do anything but just more of the same. We have infrastructure, open clinics, street pets, sell product, and we grow. And so there's nothing we really need to go vertically or sideways to build out what we need to do for the company, which is kind of a nice place because my people are fatigued. They're ready for me to stop buying companies. And, I mean, 2 years ago we had 200 employees, and two years later 3,500. That's just a lot. No, there's nothing big.
Very good. Well, now we have a few thank yous to offer. First of all, for all the business community leaders who have joined us today, our campus colleagues. Our faculty distinguished panel, Professors Mattingly and McIntosh. Of course, our Dean of the COBE, Dr. Mark Bannister, for joining us. But now the loudest round of applause and a big thank you to Cord Christensen. Mr. Christian.